The House comes to questions for oral answer. Question number 1, in the name of Kanwaljit Singh Bakshi.
Thank you, Mr. Speaker. And my question is to the Minister of Finance and asks, what reports has he received on the New Zealand economy?
Excellent.
The Honourable Bill English.
Mr. Speaker, yesterday the Treasury published its monthly economic indicators. This shows that slower economic growth in the first half of 2015 is expected to return to around trend growth of between 2 and 2.5%, supported by a recent rebound in dairy prices, as well as wider economic resilience as export-driven firms enjoy the benefits of a lower exchange rate. Inflation remains low. Higher population growth is now boosting housing markets both in and outside Auckland. There are, of course, risks to the outlook from the weak global economy, but overall the country remains on track for moderate economic growth.
Supplementary.
Supplementary question, Kanwaljit Singh Bakshi.
Thank you, Mr. Speaker. What reports has he received showing increasing business confidence in the economic outlook?
The Honourable Bill English.
Well, Mr. Speaker, over the last 6 months or so, business confidence has been up and down. The most recent report for October shows an improvement from recent lows. That is, slightly higher investment intentions, slightly better employment intentions, and a lift in residential investment intentions, all aspects of moderate future growth. ANZ says the increased confidence is based around a rebound in dairy prices and points to increasing activity in tourism, services sector, primary industries and housing outside Auckland. These are supported by lower interest rates and a lower New Zealand dollar. So they indicate moderate growth over the next 6 to 12 months.
Supplementary.
Supplementary question, Kanwaljit Singh Bakshi.
How does Treasury's outlook for the economy compare to their latest formal forecast set out in Budget 2015?
The Honourable Bill English.
Well, Mr. Speaker, as we've mentioned, Treasury is now looking at economic growth returning to trend around 2 to 2.5%, but the low growth for the calendar year 2015 could be under 2%. This is clearly weaker than the 3% growth Treasury were expecting in Budget 2015, and that, of course, will have a flow-on impact to unemployment and wages. Growth out ahead of us to 2 to 2.5% means we'll still see solid job growth and wage increases, but a bit less than was expected in the budget.
Supplementary.
Order. Supplementary question, Kanwaljit Singh Bakshi.
Thank you, Mr. Speaker. What is the impact of low inflation, given it's currently sitting at 0.4% in the year to September?
The Honourable Bill English.
Well, Mr. Speaker, the low cost of living increases are good for families. They mean that any pay increases go further, and this also helps keep interest rates lower for longer. The measure of inflation, though, is likely to increase when the effect of the significant drop in oil prices falls out of the index. Our revenue is directly influenced by the rate of inflation, so a lower rate of inflation means the government revenue is expected to be lower than was previously forecast.
Supplementary question, Right Honourable Winston Peters.
What effect on the current account deficit will the $4.4 billion in profit this year, repatriated by the big four Australian banks, have?
The Honourable Bill English.
Well, Mr. Speaker, of course, it's not all repatriated. The New Zealand government taxes those profits, and I think in the last year the banks paid something like $2 billion worth of tax. But overall, the current account deficit and the net and the international investment position has been improving, and generally have been better than forecast for the last 4 or 5 years.
Question number 2, Right Honourable Winston